Is it the last call for silver? Well, this silver insider makes a bold prediction. Did you know that SD Bullion is giving away a monster box of 2023 Silver Eagles? Sign up today at sdbullion.com/sweepstakes. Can you imagine some future new stacker being super jealous of you for being able to buy silver maples for $30, $32 each? I know that's hard to imagine, but those days are coming. And eventually, you won't complain one bit about premiums when silver zooms past its all-time inflation-adjusted high. Now, if you're trying to make a quick buck, if you have a short-term perspective over silver, well, maybe silver isn't for you, really. In fact, maybe you should sell it to me. Seriously, you really need to appreciate historical trends with silver over the long term. And you need to have a global perspective on silver as well. And to help you with all that, I have John Lee, the CEO of Silver Elephant Mining Corp, with me. He's a silver stacker, a silver insider, and a sponsor of this video. Listen really carefully. You're going to learn a lot. And John's going to make a bold prediction for the price of silver later this year. Hi, John. Thanks for joining Yankee Stacking.
Yes, Yankee, good to be back on your show again.
Silver's spot price is up 5% year to date and up 26% from its March lows. Does this recent run up in silver have legs, John?
To answer your question, in the short term, the dollar since October had a correction of over 12% from the top of 114 to right now just over 100. So it is trading at the consolidation range of about 100 to 110. And the other side of the coin, silver is, I think I came on your show maybe a year and a half ago, and I said silver is going to be trading at the band of $22 to $28. It broke down to the $22 support, and now it's trading back in that $22 to $28 range. So in the short term, there's also the proverbial selling, make and walk away. I would not be surprised if gold and silver have a bit of a consolidation or pullback, given that gold is trading at that all-time high of a $2,100 level, while the dollar stays a better rally as a counter-trend movement. However, this is not a high confidence call, which means for the fundamental investors that has more than a 1 to 2 year horizon should really stay put. And maybe you have a bit of, if you have a bit of firepower, you might wait for a bit and see what happens in the next couple of weeks.
You've traveled the world twice last year, and I want your global perspective. What are you seeing internationally with regards to silver?
Last year, I was in Canada. I was in Vancouver. I was in Toronto. I spent quite a bit of time in South America, in Colombia, and I was in Mongolia. I spent time in Thailand, in Japan, also in Taiwan. What's driving gold and silver, in my view, is not so much the Silicon Valley Bank or inflation, or the stock market, which I believe has reached a temporary bottom. And it's not really actually even to do with the interest rate. I think it's going to go a lot higher from here after a breather. But it's really to do with diversification of the global central banks. This dollar reign is only a marriage of convenience or arrangement of convenience, meaning that the Saudis are buying the dollar because the United States is buying buying oil in turn providing protection for the Saudis. And you have the industrialization of the early 2000 with the Chinese modernizing, industrializing the economy, shipping overpriced goods for overpriced currency. And then you have United States being arbiter of many sort of geopolitics of dispute and being the statesman. You might have a temporary reprieve of the dollar, but the macro point of view is the treasury holding around the world is going to continue to go down. And the confidence of the dollar in terms of global currency is going to continue to be eroded because of the safe haven status is no longer the case. And right now, I think technically silver is going to stay around $22 to $28. So we're in that band. But I'm very confident that it will be broken out before the end of the year. Also, the premium the coins and bullion is relative to the paper price also is a good foretell sign of the real physical demand because the payment market is so heavily managed. So when you have a big premium like we're seeing right now, it's unprecedented premium right now. I think American Eagle right now is trading at around over $10 premium to the paper market, and that premium is going to continue to increase. And that's a foretell sign of the tightness of the supply on the global basis.
As you know, 15 years ago at the start of the Great Recession, gold and silver sold off. Silver more so because of its greater susceptibility to economic downturn as an industrial metal.
Yes.
I think when the recession really gets rolling, it's possible we're going to see that happen again. Do you think that is likely to see a pullback when this recession revs up, or are we actually past that point with silver? Do you think it's going to hold?
If you look at the answer is, I do believe the worst for silver is over. I have a hard time seeing silver going below $22 again, because the reason is if you look at the gold to silver ratio, it's always been oscillating between say 40 to 100. So that ratio topped at over 100 not only 6 months ago when silver was $17 and gold was less than 1700, about 1700. So the ratio was over 100. Typically, and that ratio has only exceeded 100 only a few times in history. So that tells me right now that the ratio is at 80s. That tells me the worst is over. When the ratio is high, Yankee, that means that there is a lot of fear in the market. And now the ratio, the pendulum is likely to swing the other way. Last time the extreme was reached was 2011 when the ratio reached 35. So silver at the time was $50 and gold was around 1800. I do believe that before said and done, maybe not this year, but maybe this time next year, that ratio is going to approach maybe low 40s again. So at a conservative gold target of say 2,400 and at a $40 ratio of gold to silver, you're looking at around a $60 silver price. It is not a high confidence call, but I do believe that silver is going to break out of the $28 resistance, which there's really not a lot of congestion until silver go to 35, and even that will only make a very, very brief stop in terms of how the markets are managed, where the dollar is, where the interest rates are, where the geopolitics or war or whatever. But I would say a $40 would be a very quite conservative target for me this year. But I would not be surprised if silver continued to go, because nobody knows when the train comes, when the buying come in, you don't know how high it's going to go until you see high side. However, I do want to say that I don't see a lot of craziness in silver market right now. I call the Kitco bullion dealer in Taipei just late last year. There's not like people are hand over fist at the local dealers going after silver. And silver also had the headwind in Asia in that, for example, in gold in Taiwan is not taxed, but in silver there is a tax on silver. So I am not seeing I'm not. There's some saying that the Asians are so smart, they're buying silver while the dummies in US are don't know what to ounce. I don't see it that way, and I don't think there is a broad consensus of participation in the silver market while US oblivious. I think it's a pretty much a global trend. I think there's a lot of sort of uncertainties in the market overall, which might put a pressure on the silver. But like I said, if you are a long-term investor, it's a great opportunity for you to buy a few more ounces before. I believe there's going to be a big run up in September. The greatest gain is going to be seen in September, and I am very confident that $28 being taken out by the end of the year.
In September. Wow. I read that scientists at the University of New South Wales in Australia claim that solar manufacturers will likely require over 20% of the current annual silver supply by 2027, like 4 years from now. But by 2050, solar panel production could use up to 98% possibly of the current global silver reserves. All of our current silver just for solar panels. I know we're eating it up, but is that even possible?
I don't do it too much into industrial demand. And Yankee, the reason is it's always the speculative demand that drives the market. Silver didn't go from $15 to 15 2011 because there's a new technology that requires more silver. So the industrial demand is always going to have that substitution effect that will come into play. And this is not only just sort of applicable to silver. If you look at oil, it's another example. People are talking about peak oil theory. You remember back in 2008, 2009, when oil went $150 a barrel, and they're like, oh, the world is running out of oil. You had even the pundits from the likes of Eric Sprott and all the most famous people are telling us we're running out of oil, and yet oil went to negative back in 2021. And
I remember.
And you also have the dynamics of the demographics. Our population had reached a plateau, and I do actually subscribe to that, and I see anecdotal evidence from traveling around the world. So with that, it's going to put a damper on the silver price. However, I think, Yankee, you're talking about supply rather than demand. In terms of supply, silver production has been fairly steady, up or down in a single digit. It hasn't been much supply disruption. But from silver supply from mines, it's going to start trending down, because silver primarily is coming from byproduct credits. And these byproducts are coming from major, mega, huge open pit projects in Peru. Many of these projects have been commissioned 10, 15, 20 years ago. There will not be new mines coming on stream because the cost of building a mine used to be in the $3 to $5 billion range, and they're going to probably go up to $5 to $10 billion range. So with the current interest rates and uncertainties, and the time it takes to build a mine used to be 3 to 5 years, and now it's going to take even longer. I don't see a lot of new supply of silver coming on stream. So the economics 101, the price of silver is going to be very inelastic, the supply coming on stream. And a lot of the primary silver mines are underground. And these mines, a lot of them are commissioned back 10, 15 years ago in the first run up of silver from $4 to $15 in 2007. A lot of these mines are becoming exhausted. So they're not going to be new supply of primary silver mines coming underground. And then the secondary byproduct silver supply coming from existing huge projects, you're going to see their supply start dwindling as their mine life go towards depletion. And you're not going to see new supply coming on stream. So altogether, supply, you're not going to see surprise. You're not going to see surprising supply coming out of the woodworks. And everything is all going to be resting on that speculative investment demand. That is really going to be the single big factor that drives the silver price. It's just right now. And it's going to be just like it was 2001. I see more like a 2002, 2003 rather than 2009. That gold is going to lead the charge. The central bank diversification is going to be the driving force for gold. Recall, gold went from 200 to almost 350. Then silver was a lagger. Silver didn't start its ascent from 2004 at $4 to around $12. We're going to see the exact replay. Eventually, people are going to tag on that gold to silver ratio, and a lot of the gold investors then are going to rotate that gain into silver. So just a little patient, gold is going to break out of $2,000 this year, and then silver is going to catch up, and you're going to see silver quickly go to 28 with a bit of a trading, and it's going to break out of $28 before year end.
So tell me about your specific junior mining company, Silver Elephant Mining Corp.
Well, we're in the business of silver mining. Majority of the valuation of a mining company is actually based on their reserves and silver ounces in the ground. So it's a way of, it's almost like you're buying a mint per se that has a lot of bullions in their inventory. You're not buying a mint based on the sales that they do, the business, but you're buying based on the inventory of the silver they have. Mining companies, by and large, are still trading at 20% on the bottom because they're coming out of the equity correction. They're still in the classification of equities. And they're also sort of are coming out of the carnage from the cryptocurrency because they share a common set of investors. And there's actually a pretty well-established ratio of gold or silver versus silver mining companies. So that ratio right now is a very, very high. Or if you look at the ratio of mining company versus gold, they're trading at very, very low level. So what that means, Yankee, is for some of the audience that has good risk to sort of has a bit of risk tolerance and have a bit of time horizon, it is a good time to look at select few gold and silver companies with good sizable resources in the ground, because you don't want to be holding companies are low reserves or resources because you cannot time the market, and it's a depleting industry, so their reserves is going to be depleting over time as they mine more gold and silver out of the ground. So I think I've been given an example just real quick. I mean, in the heat of the market, say in 2021, when silver went from 14 to 50, or 28, from 14 to 28, or in 2011, silver went from 15 to 50, or in 2004, when silver went from $4 to $15, the valuation of a silver company will be upwards of $1 ounce of silver in the ground. So for a company like Silver Elephant with 100 million ounces in the ground, it was being valued at over $100 million. But at the bottom of the market, like we were right now, we're being valued right now at 20 cents in the ground. So our valuation is 20% of what we were only 2 years ago. Do we still have the silver? Yes. You know, of the CapEx and OpEx that changed significantly, we don't know because studies yet to be done. So it's more art than science. But rest is like, you know, is the project is in Bolivia. Has the geopolitics changed so much in Bolivia? No. So the pendulum is going to swing one way to the other, just like the silver price did back in October. So it does present a very interesting opportunity right now in the silver equity space. My sort of feedback to your audience: go for the big elephant, and that's why the company is rightfully so named Silver Elephant, because we do have a big giant elephant in the ground in terms of our silver resources.
Well, Silver Elephant Mining Corp, the ticker symbol is SILEF on over the counter, Toronto Stock Exchange, ELEF. Thanks so much for joining us, John. I'll put all your information in the description of this video. Hopefully we can talk again soon.
You know what? That's maybe reschedule for by the end of the year and see where silver stands.